Yo, what up guys? It's Narcos FX, and I'm back with another video on my YouTube channel. So in today's video I want to talk about multi-time frame analysis. Multi-time frame or top-down analysis. I just want to show you how I look the charts, how I look for my trades, how I take my entries, and how I manage my trades. So usually I start from a daily time frame. When I analyze, start from a daily down to 4 hour, and for my entries I go to my 1 hour time frame. So on my daily time frame I look for my structure. I identify my structure. That is when on the daily time frame, that is where I identify my structure, whether we have a rising channel, a rising wedge, ascending channel, falling wedge, or descending channel. All those type of patterns, that is what I look for on a daily time frame. And then usually on H4 I see the very same thing, like what I saw on a daily. I usually see it on a daily time frame on H4, and then down to my H1. That is where I look for my entries. So what you wanna do, you wanna I hate analyzing this price action, because it's no longer valid to what's happening here. You understand? So that is, I hate analyzing what happened ages ago, even though sometimes it might be relevant. Just for in this case, maybe you can find this trend line from here. What the fuck, man? You might find this trend line from here down to the spot. The price might respect it, but for me, I wouldn't. That is not how I would analyze this chart, because I don't want to include the old price action. I want to focus on the most recent. So you wanna analyze, you wanna draw your patterns on the corrections. Understand? So in this case, we saw the price pushed down in an impulsive price action, and then it corrected to the upside. So we are seeing an impulsive nature followed by a corrective price action. So this tells us the next impulse should be to the downside. That is what I see here, and that is what I look for on my daily time frame. So I'm just gonna go ahead and draw my structure. On my daily, my structure looks like this. You don't have to be beautiful. Sometimes you have to treat the market ugly. That is what the professionals say. So in this case, this tells me I'm looking for price to get a little bit. Anyway, come here. I'm looking for price to get a little bit higher before I sell. I know the next impulse. I'm anticipating what the next price impulse will be to the downside. That is what I look for. So on 4 hour, I should pretty much see the same thing. And then on H1, usually on the H1, the 1 hour time frame moves is different from the daily time frame. So that is where you should exercise patience. That is where you should be patient and wait for your 3 time frames to match. My daily shows me the price, even though the price is going up, but I see it is impassive. It is corrective. So the next impulse to the downside. The 4 hour should tell me the same thing. Even if I draw the structure here, it should tell me I must look for the downside. And on H1, if I draw the structure on H1, it should tell me I should look for the downside. You understand? So on H1, I don't see much here, because I have my structure drawn on daily. So I'm gonna go to my 1 hour. I wanna see, my daily told me which the next impulse is gonna be to the downside. So I wanna catch that impulse. Understand? I wanna catch that impulse to the downside. So my H1, if I identify anything here, should tell me the sales that I saw on a daily time frame. Some professional, if you were a professional trader, like if you had an experience or advanced in this industry, You would take some short-term buys. You would take some short-term buys while you wait for longer-term sales. You understand? If you saw price here, you would have taken this buy. Price in this area, you would have taken this buy. But you know what the longer-term price action is going to sell. So for me, as a trader that I am, I wouldn't take those short-term buys. I would wait for market to give me the longer-term sales. You understand? That is how I approach the market. I want to catch the quality trades on. Yes, I do take the losses. Yes, I analyze taking this direction, and then the market goes in a different direction. It's okay, it happens to everybody. We do take losses, but if you are patient and you believe in your analysis, you can take 3 trades in a row which are lost. You can take 3 losses in a row, and then one win is gonna cover all the losses that you took and give you even more profits. You understand? If you are going to be patient, because taking a trade, sometimes you have to wait for your trade from Monday, Tuesday, Wednesday, and then the trade will start playing out on Thursday. It's completely okay, because sometimes we get glued on Instagram seeing our favorite traders posting winning trades every day, and then you get that pleasure of taking a trade every day. You feel like you should have a trade every day, which is not good. You have to wait for your trade. That is why they say trading is 90% waiting and 10% executing. Understand? So for now, this analysis tells me on H1 I have a rising channel or a rising wedge, because there is decreasing as it goes up. Same thing that I saw on a daily time frame. You understand? Same thing that I saw. So what I'm gonna be looking for is whether the price comes to this high, and sell. That's possible. But it is also possible for the price can come to a bigger time frame structure before selling. So that is the area I'm looking to sell, and this is another area that I'm looking to sell. I'm not gonna sell when the price is here. I'm not gonna sell if the price is in the making here. I wanna sell here at this value area, and or else I wanna sell in this area. These two scenarios are possible. Understand? These two scenarios are possible. Usually when the price gets to the area of value, you can start correcting to the upside before shooting to the downside, or it can go give us a double top or shoot down, or maybe a head and shoulder. So overall, I know I'm looking for sell at, at those two areas. So let's play the price and see what it does. Okay, I'm just gonna adjust my structure. Can you see the price had not touched this area, so I wouldn't take a trade there. Let's play price action even better. Oh damn. Okay, we kind of missed the sell. Price printed a head and shoulder there, but we missed the sell. That is when we should be patient. Other traders will see, okay, the price is here, and it has a head and shoulder, then they place their sales here, which is a wrong way to trade, which is very wrong. Tell me if you put your sell. Let me take this tool. Taking a sell here just because the price is left you is not a good way to trade. Where would you put your stop here? You see, if you have missed an entry, that is when you should wait. There's plenty of entries in the market. There's plenty of trading opportunities in the market. That is what they say that is what they mean when they say patient in the market space. So you can see I have already missed my very beautiful entry, which is a head and shoulder. What I must now look for is a pullback. The market always gives you a second chance to enter the market. You understand? For example, look at this. If you were looking at this price action, you clamp and then you miss this impulse, and then there comes this bull flag. Then for me, I would have taken a buy here after this bullish engulfing candlestick, this one, and then to the upside, and then you would have banked all these pips. You understand? That was a second chance to enter. So in this case, I have missed the head and shoulder sell. I'm looking for a second chance to enter my on myself. Oh, let me remove that. So now I'm looking for a second chance to enter my sell. You understand? The price should pull back. Always it does pull back. Even though sometimes it doesn't pull back exactly to the point to where you would want, because I want the price to come to this line, to this area, which is the neckline of the head and shoulder. Sometimes it can bounce around this area. Sometimes it can even come back up and give me a double top before going down or before continuing. So now I'm looking for a pullback. Then I'm gonna take my sell. Just gonna delete the bigger time frame structure because I have a very beautiful H1 structure that I wanna take my trade. I know what this structure is supported by a bigger time frame structure. That is why I deleted the bigger time frame structure. I know which this cell, this H1 structure is supported by bigger time frame structure. So I have that at the back of my head. So I'm gonna mark my low, the 90% of the structure, which says with 90% of the time the price will test this low. As I have my H1 structure supported by the bigger time frame structure, evidence is I have gathered all the evidence and I'm confident about what I wanna do. So now I'm just gonna look for my pullback before I enter. So I'm just gonna mark this supply zone. And as well, I'm gonna mark my neckline of the head and shoulder. Understand? So let's play the price. Wow, that push up. Nice. So this neckline is no longer valid. I remove it. Okay, you see this rejection. This one, I have my entry now at the trend line and the support and the supply area. This is where I'll place my entry. As soon as that red candle close my stop just above the wick of that rejection. First target, this is my first target, the touch of the trend line, but the overall target would be the 90% rule of the structure. So this is a trade that you would hold for like 2 weeks, sometimes 3 weeks, depending on how the market is, how fast is the market. So I don't want to get ahead of myself putting my stop loss far there. So I'm just gonna put my stop loss on my first target. Sometimes I put my stop loss on the second target, but the price has not yet broken out of the structure. So I will put my target in this area. Most of the time I put my stop loss only. Why I put my stop loss only? I just want to cut my losses short. I know when the price goes up, takes me out, then I'm out of that trade. But the reason why I don't put my take profit target is because if the price impulses and breaks out of the structure, then I'm still in a trade. Understand? I'm still in a trade. I'm gonna manage it until it retraces back and then hits my trade stop loss, my trading stop loss. So once I'm in the trade, I took a screenshot. That is what I always do. Once I'm in the trade, I took my screenshot, then display price. Okay, it moves into my favor. My stop loss just above my entry. As well. So that is where my stop loss is. Then I'm gonna let price move to its thing. If we get a pullback and then if it takes me out, then that's okay. I'm okay with it. If it continues, then I'm in the trade. I've already eliminated risk from this trade, then I'm gonna let it run because my target hasn't hit my target yet. It hasn't come to this area or this area. As it moves, then I move my SL as well. This is where I would put my stop loss. Covering this portion. And then let the price, then let the trade do its thing. Now, it is important to zoom out as you manage your trade, because remember we have a trend line here which might be respected. Bear that in mind. Then the price made another high, rejected that area, then I move my stop just in this area. You don't want to be tight with your trade management, because the price might come back and take you out with just a week and then continue to your direction. So you want to use relaxed trade management. See, we kind of have a hover in that area. Price might go up, price might go down. Nice. As soon as we have a breakout, then I move my stop loss. You want to be aggressive once the price breakout, because it can just be a false breakout to take you out and to then come back in the structure. So around this area, you want to move your stop loss like this. This is perfect. Ooh, damn son, where'd you find this? So 90% rule of this strategy says ukuthi price 90% of the changes price can come and test this area. So this is my overall target. That is why you have to trade your stop loss not too tight, but accordingly. Go to the headline. See, relaxed trade management. Let the price run. Almost took me out there. Almost took me out there. Almost took me out. And then we have another impasse. This is a lot of profit. This is, you would be banking a lot of profit from here. This is more like back testing. You wanna be aggressive around this area, because this is a lot. This, you would have banked a lot of profit from this. So you don't wanna give all this profit back to the market. So that is why you wanna be aggressive around this area, because price might start forming bigger structures. The price might develop to something, to other structures around this area. So you wanna bank as much. And then I'm out. Then I'm out of the trade, just like that. So as soon as the price takes me out here, I remove everything. See how beautiful this was. As soon as price takes me out, and then you wanna take another screenshot. You use these screenshots, and you, on your trading channel, you put your screenshots down. You analyze it. Okay, the price went up from this area, and then it impulsed down, came back for a pullback, and then I took my sell. You have the screenshots of after. You have the after screenshot, you paste it there. Then the price went down. This is how I managed to trade, and I keep trading my stop loss, and then it goes down, and then it took me out this percent of the profit. Then you write all those things down. At the end of the month, you reflect on what demand is, on how demand has been for you. You reflect, okay, this is the trade I took. It took me out there, took a loss there. Why I took that loss, and then you improve. Then you improve from those mistakes that you make, and from those winners, they give you that confidence that we have seen these things play out over time. That is how traders make money. That is how I learned this thing, and of exercising patience when it comes to the market. So that is basically how I analyze my chart. That is how I managed my trade. So this one happens to be a winner. I do take my losses as well. Sometimes you want the trade to break out, but don't break out just from here, just impulses back up. Sometimes it breaks out of the structure, then break back in. All those things happen. Sometimes you take a sell here, and the price will go a little bit higher and take you out. Though all those things happen, but you must make sure, Gucci, when you find that winning trade, you manage it the very same way as you have managed other trades, to maximize the profit, to maximize the money that you get out of the market. So that is how I look at the charts. That is how I approach the chart. I hope this video has been useful for you. You're gonna go and backtest this strategy. You're gonna go and look at the charts, analyze the charts, practice. Always say, good, if you don't have money to fund the account, if you don't have a live account that is funded, it's okay to trade a demo account, just so you get used to the market, especially when you are especially when you are a beginner. You have to trade that demo account, see these things play out, and then when you have that money, find your account, then trade what you have been trading on a demo account. Because you don't have to be greedy. So I hope this video has been useful. Please like and subscribe, guys. Like and subscribe. And also take that FTMO challenge. FTMO challenge is paying, guys. FTMO is paying, guys. Take that FTMO.